Today, we're diving into one of the most powerful option strategies out there, the Iron Condor. I'm going to show you exactly how I use this strategy to generate $1,000 in weekly income. I know what you're thinking. $1,000 in weekly income? Darren, that sounds too good to be true. Well, I'm going to break down exactly how it's done step by step in this video. So whether you're a beginning option trader or a seasoned trader, stay tuned. Guys, before we get started, be sure and hit that like and subscribe button down below. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Let's dive right into setting up your Iron Condor option trade. We first want to select the underlying asset, so the company, the stock, or the ETF. Now, we want to select a stock that has high implied volatility so that we can collect good premium, and we want it to be trading within a range as well, because in order to make the profit, we want it to stay within that trading range. And lastly, we want the stock or the ETF to be extremely liquid so that we don't lose the difference between the bid and the ask spread. All right, guys, this is the Tasty Trade option trading platform. And there's a link down below. You can get some benefits if you use my link. I use Tasty Trade as well as Moomoo. There's links for both down below. We punch in right here in the upper left, QQQ, and this is the NASDAQ 100 stock. So it's an ETF. So it's very liquid. High volume is traded. You can see 51 million shares are traded. We can look at the chart, and we see over the last year, actually the last several months, it's kind of been trading within a range after a move up. The yellow is the 200-day moving average, and it's above that. And then we've got the 50 with the red, and then 13 with the green. But we're in a good position. I think it's going to stay in this range for a while. But the RSI down here is right in the middle of the range. So I like the cues for trading Iron Condors. Now, if we look at the price, it's $496 right now, and the IV rank is 19.2. So it's pretty good IV rank so that we can collect good premium as well. And it's extremely liquid. If we look at the table mode here, you can see the difference between the bid and the ask is just a few pennies, 9.45, 9.52, 7 cents. So we're not losing a lot of premium, which is dollars thrown away if these were very wide, like $1 or more wide. After we select our underlying asset, we want to choose the expiration date for our trade and select the strike prices. All right, so now we are on the trade page and the table mode here, and we can see the regular option chains here. There's also weeklies because it's so liquid. There's weeklies traded with the Qs, but I actually like to use the regular options because there's even more volume and they're more liquid. So I like to go 30 to 45 days out to expiration. This is the perfect timing because you can collect a lot of premium and it still gives you time to be right and adjust your positions as well. And you can get in, if you're rolling every month, you can get in 12 different trades during that period of time. So we're going to open up the 33 days to expiration. You can see in the middle, December 2024 option chain. So we click on that, it opens up. Now, what we're going to do is we're going to sell, the puts are on the right, calls are on the left. We're going to sell around the 30 delta put. We're trading at 496, so basically 500. So let's look at the 480 strike, and we're going to sell, bid or sell right here on the left, the 480. And then for protection, we're going to buy the 470 right here. So on the ask buy, we're going to hit 470. Now, we collect upon hitting, if we were to hit review and send right now, we would collect $1.70, and our max profit would be what we collect up front, and our max loss is the difference between the $10 with 830, or $10 minus the 170, which is 830 is our max loss. We can go to curve mode, and we can see we're profitable as long as we stay above it, since this is the put side of the trade. So now let's go to the call side. So we're 500. So we're going to go above the strike price. We're going to go about the 30 delta again. We're going to go out to the 520. So $20 wide on each side. We're going to click on the sell to sell it. So we collect premium for that. And then the 530 as protection, $10 wide again. For this, we collect 230 228. To keep it clean, I'm just gonna, we can probably get filled at $3.30. So I'm gonna do that. Now, we hit review and send and place the trade. However, take a look at the curve mode. This is our profit zone right here. If we hit on analysis, we can actually really see the profit zone here, because we're not actually, we get 100% profit if we land anywhere within the 480 and 520 strikes within the next 33 days before expiration. But this is how the trade is set up. By the way, if you want to receive my free options guide showing all the different option strategies and how they're set up and managed, comment options guide down below and I'll send you the link. Now let's look at risk management and position sizing. Maximum risk is the width of either spread minus the credit received. If our spreads are $10 wide and we receive $3.30 or $333 in credit, our max risk per contract is $670. And keep in mind, we can only lose on one side. We can't lose on both sides. The maximum reward it's simply the credit that we received when we open the trade. That's our max profit. In this case, $330 per contract. Now let's take a look at the position size that we're going to need and the number of contracts in order to target $1,000 per week in income. Since we collect about $330 per trade, let's aim for a conservative 50% profit, so $165 per trade. And we are going to need multiple trades for better risk management and in order to accomplish that $1,000 weekly income. If we're aiming for $165 and each contract makes $165, we will need about 6 contracts, and 6 times 165 is $990. So hey, sorry, $10 short. However, it's pretty close. But here's the kicker. Our max risk will be 6 times the 1,000 minus the 330, so $4,020. So it's about a 1-to-4 ratio. Now, if my goal is to place 6 trades per week, then I'll likely place maybe a couple on Monday, a couple on Wednesday, and a couple on Friday. I like to spread out my risk as the market moves. This provides a good balance and spreads out the risk over time, and it allows me to move with the market. All right, guys, let's talk about one of the most crucial aspects of Iron Condors, adjusting and managing the positions. All right. Rolling the untested side. If the stock moves towards one of your short strikes, consider rolling the untested side closer. So if it's moving up, you might roll your put spread higher. On the other hand, if it is moving down, you might do the same for your call credit spread. You want to convert to an iron butterfly at some point if the stock moves significantly in one direction. And you do this again by rolling the untested side. This narrows your profit range, but it allows you to collect additional premium and lower your risk. Sometimes you're going to want to roll out in time. If your position is challenged and expiration is approaching, then you want to consider closing out and rolling the entire position and readjust, centering the trade to give you more time for the stock price to move back to your profit zone. For managing winners, I recommend closing the position when you've reached about 50% of max profit. This approach can increase your win rate over time and take risk off the table. And you also want to have a plan to cut losses. A common approach is to close the trade if it reaches 50% max loss. This helps preserve capital for future trades. So if your max loss is $670, then we'll want to close the trade if we lose more than around $335 on any one Iron Condor. Now, if we roll the untested side and collect additional premium, like say $100, then we can have a max loss of the 670 minus the 100 or 570. And then we would then readjust and close at a loss of around 285 or a gain again of 165. All right, guys, we've covered a lot of ground from setting up the Iron Condor trade to managing the positions and closing out. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe. Leave a comment, ask a question, let me know what you're trading. I answer every question. Thanks for watching. I'll see you in the next video.